We begin in Washington, where the government is getting tough on tax loopholes. President Obama is urging Congress to take action and stop American companies from taking advantage of regulations that allow them to pay a lot less in taxes.
I've been pushing for years to eliminate some of the injustices in our tax system. So I am very pleased that the Treasury Department has taken new action to prevent more corporations from taking advantage of one of the most insidious tax loopholes out there and fleeing the country just to get out of paying their taxes.
While Congress has been slow to act in the past, many see the Treasury Department's new rules as taking direct aim at Pfizer's $160 billion takeover of Ireland's Allergan. That sent shares of Allergan tumbling more than 14%, while Pfizer's shares rose. Meg Tirrell has more on whether this crackdown could potentially crack the biggest pharmaceutical deal ever.
It was the third set of rules issued by the Treasury Department to curb so-called inversions, mergers designed to move an American company's tax base overseas. And many say this time they'll succeed in stopping the biggest inversion deal of all, Pfizer's merger with Allergan.
I'm leaning with the market, which suggests the deal looks mostly done, as in not going to happen.
The deal was worth $160 billion when it was announced last November and met the more stringent structure required by earlier Treasury rules to allow Pfizer to invert. Allergan shareholders would own 44% of the combined company. But the new provisions would change that, prompting many to assert Treasury specifically targeted this deal. The rules are complicated, but they come down to how big the foreign company is compared with the American company. The new guidelines would exclude acquisitions made by the foreign company of U.S. assets in the last 3 years. This would mean two mega deals Allergan completed in 2014 and 2015 wouldn't count in calculating its size compared with Pfizer, putting it back under the threshold that would allow Pfizer to invert.
It makes the transaction a lot less valuable for Pfizer. And so I would expect that Pfizer would then walk away without the benefits of the tax minimization strategy.
Pfizer and Allergan said in a joint statement last night that they're reviewing the Treasury's actions and won't speculate on any potential impact. As for Pfizer and Allergan on their own, most analysts see bright prospects for both. Pfizer, they say, could potentially split itself into two smaller companies, a move supported by investors. Allergan is close to closing the sale of its generics business to Teva, with more than $40 billion in proceeds headed its way. Both are expected to remain buyers if they remain independent from one another. And though this deal may be thwarted by the new rules, President Obama said today the only way to stop inversions completely is for Congress to enact tax reform. Lowering the corporate tax rate in the U.S. appears to be just about the only thing both sides agree on. For Nightly Business Report, I'm Meg Tirrell.